Welcome back to Trading IQ, where we will learn the unlimited nature of the stock market. This is Shourabh Bhattacharjee, and in today's video, I'm going to keep it very raw as I will build my watch list within the IT sector. So I did a video recently on Tech Mahindra. Why did I choose Tech Mahindra and why I invested on Tech Mahindra and chose over other stocks such as Infosys, TCS, HCL, and other tech giants. I shared my approach, so you can check the video from the I button. Now in today's video, I'm going to share some of the very new stocks within the IT sector that I did not know that even exist. So I did a simple search on Google as I was trying to find my next investment, that technology stocks in India, and I found that huge list, and I was glancing through some of the stocks which looked very promising. That I'm going to share, and I'm going to keep those stocks within my watch list. Now I will share my approach on how I build my watch list, because the stocks that should be in my watch list are in stage 1 base and waiting for the breakout from stage 1 to stage 2. Those are like the ideal stocks that should be in my watch list, because those are like undervalued stocks, because when it had a stage 4 decline and then it is currently in stage 1 base waiting for a breakout. So those stocks and some of the stocks which are currently in stage 3, because it had a good run, stage 2 phase, and afterwards it is currently in a consolidation mode. Now after stage 2, if it creates stage 3 and if it breaks above its upper level of stage 3, then there is stage 2 continuation, and I'll have to wait for that breakout. So what I'm going to share in today's video is my simple approach using Stan Weinstein stage analysis to create my watch list. So please watch till the end. So this is the chart of the Nifty IT. So you see Nifty had gone up to its all-time high and closing into 19,000 or 20,000. Nifty 50 had its good run till 39,000, and then it is currently in stage 3 or stage. You can even call it a stage 1 base, because this is like a stage. Let me just add the 30 week. So this is like a stage 4 decline, and after stage 4 it is currently creating a good base, right? Solid foundation, and it is testing the upper level of this base, which is at 30,000 or around 31,200 sort of level. This is like an index. This combines all the tech giants such as TCS, HCL, Infosys, Wipro, Tech Mahindra, and all the L&T. These are the big giants that are part of this index. So this determines the future of the IT industry, of the IT stock. So it is testing its upper level, and I'm very bullish on this, because I'm not heavily bullish because I'll have to wait for its breakout, and it has that mileage. You see, it has to catch up because Nifty is already at its all-time high, and banking sector and other sectors are also at its all-time high, and IT sector had its run when after the pandemic it went up to a crazy number, and now it is consolidating, which is of course healthy sign for the market, because it had its momentum. Now if it gets its momentum and breaks out of this level, I will be heavily bullish on IT sector. So now I'm not heavily invested, but I will be, like I am in the PSU sector. I have RBL Bank, I have PNB Bank, I have Axis Bank from private banking sector. So I'm heavily invested in the financial sector because the structure looks good, and as you see the banking, I'll do a separate video on banking sector, banking industry. But in today's video, my focus will be on the IT sector, and as you can see, it is clearly testing its upper level. I am very hopeful that if it breaks out, some of the top IT stocks or some of the small cap IT stock will perform better, because those have mileages. Like TCS, it has already had a huge run since its time. It had its time, right? It's like an old dog. So now I'll have to look for some young blood who has like a 2,000 or 5,000 or 10,000 crore market cap, and which has the mileage to challenge these IT companies like these big giants. And there are a lot of stocks I'm going to show you. So I'll create my watch list. So I'll do a quick simple search. right? And this is the stock. So in this is my watch list, by the way. As you can see, Tech Mahindra is there. So I bought Tech Mahindra around its breakout level at which was close to 1200. So I'm doing fine. I mean, I'm very optimistic on this stock, on this structure, because you see this is a very clear stage 1 base, and it is out of its stage 1 base, and when it is in stage 2, you think, you know, wonder happens. So you can check that analysis from the I button. Now I'm going to check in these stocks and try to build my watch list here. So Affle India, so clearly it is in stage 3, and you know, I'm not interested in this stock because you know, it's in stage 3 for a very prolonged time, since early 2020. It's already mid 2023, so I'm not interested in the stock. Happiest Mind Technologies, I'll check all these stocks one by one, and you know, based on its structure, I'll add them to the list, or will not add it to the list. So Happiest Minds is you see it's also in stage. It's in stage 1 base. So it is clearly creating a stage 1 base, and the upper level of this base is 1088. So I won't mind adding this to the list, because I mean, it will take some time. So this is what you have to do when you're adding a stock on the watch list. It might take a year or 2 before you can even put an entry to that stock, because it has to meet with the criteria. So my criteria is what? This is the base, right? After its inception, it had a huge run from what, 300 to 1500, right? Like 500% jump within a very short period of time, and then it has seen its stage 4 decline. Now it is trying to create a base, because you see the lower level of this base is 780, and the upper level is 1100, right? Just the psychological number 1100. Now it is currently trading at what, 890. So it has to have that grouping of good volume, and when it is breaking out of this sort of base, it has to break out with significant volume such as this 58 million or close to that, right? Or there has to be a good number of groupings. So this clearly met. So this clearly meet with the criteria of adding it to my watch list, because it is in stage 1 base. So I'm going to add this to the list. It's already there, right? Wipro, I'll not check. Root Mobile. So again, sometimes what happens, it also depends on perspective. Yeah, it also looks good. So again, I don't see some good volume, and I don't have any good volume to compare with, so I'll rather not keep it in the watch list, because you know, how do I compare its volume, right? The volume is pretty low, right, based on the structure. So I'll not because I'll not be able to do volume comparison, so I'll not keep it in my stock watch list. Let's check one by one. See, it's in clear stage 2 continuation setup, so there is no point of it being added to my watch list, because it already is in stage 2. So we don't buy stocks which are currently in stage 2 or stage 3 or stage 1. We will only buy if it is breaking out of stage 1 to stage 2 base, or stage 3 to stage 2 continuation. Okay, so I think I haven't shared what is like stage 3 to stage 2 continuation. So this would be probable stage 1 to stage 2 breakout. If it breaks out of this with heavy volume, this will be a criteria of stage 1 to stage 2 breakout. So I'll look for stocks which are sort of in stage 3, and I'll keep them in the watch list based on the volume pattern. Let's look at Tanla. I did not even know this company that even exists. So it's pretty. Now see, what a wonderful story it has. I mean, I do not know what they do, what software solutions they have. You know, this was the level 88, and when it broke out of this level, with you see the grouping of volume, where it is right now. 2000 from 88. Can you imagine the percentage of profit? Just calculate, right? Calculate on your own, and that's what I call that. That is what I'm learning for myself, and I'm trying to help you learn that the unlimited nature of the stock market. So again, it is currently in stage 2 and creating a stage 1. It already had a breakout from its stage 1 base, right? You see, this has created a base, or you can prolong this one as well, or this one, right? Whichever is coming, because it took support here, and it even had this support around this time, right? So it was a stage 1 base after stage 4, and then broke out of it. You see, with the grouping of volume is pretty significant when you compare it with its past performance, right? Now, why I want to add this to my watch list, because now it is currently retracing back to its breakout level, which is 1016, and it is at 1098. So I might even add some of my capital at this point, or if I might even wait till till 1050 or 1020, whatever. Like I need it to be closer to the breakout level, and if I feel good, I might invest maybe on Monday. So it totally depends on my risk appetite and how much capital I want to employ and all that other thing. So that I'm not sharing, because that varies based on your psychology, and my psychology is different than yours, and my risk appetite is different than yours. My net worth is different than yours. So you only know that how much capital can you employ and how long can you wait. Now, if I invest around this breakout level, my stop loss will be pretty close to, I would say this, around 900. So I'll have to have that gap and that wiggle room for it to bounce back from its breakout level, and I will keep this stock, whatever stocks that I'll be investing in, I'll keep it for long term based on the structure and based on several other factors, like what are the industry is doing, what the overall market is doing, and all that. So I'll keep this in the watch list. Just because of that, it is retracing back to its breakout level, and this is like a probable buy, like a very, very short term buy right now. So moving from Tanla, I did not know this company, the name. That's pretty strange, and I'm going to invest. I'm planning to invest in this company. That's now this is one of the stocks. I find it to be I might contradict. Sometimes when you look at a chart, you might not understand what it is doing. So it is sort of, I'm confused. If I'm confused looking at a chart, because I don't see. So it had a good run, right? It had a good run. So just remove this one. It had a very good run here, and after this one, the volatility is pretty high. The upper and lower level is 360 and 960. So I'll not bother looking at this one. So I'll just move on from this one. So I'll have to feel good. So I'll not look at Infosys, Tata, HCL. I'll just skip these companies, these big giants. I'll look for the young bloods, or some stocks which have which has a mileage to go up, right? So this is the stock, right? You see, if you look at the long-term picture, of course, it might take a long time to break out of its. So you see, this is a long-term base. It excites me. It's a long-term base, but again, the upper level, it is way above from its current level. So I'll not keep it in the watch list, because again, I'm not sure what's going on with this company. I mean, it's of course based on which it is not doing great, but if it breaks out of this level, I think it's not sure if it's dealing with bankruptcy or what. But based on, I don't need to even check its fundamental, but I don't think it's doing good. So I'll not keep it, because see, from 32 to 120, it's like a huge percentage up, and I mean, it might take many years. So I'll not keep it in the stock watch list. PV Fintech, again, I did not know about this company. Again, I will not keep it because I will not be able to compare its volume with its past performance, and I'm not sure exactly the level, right? Because it is very new to the market. So I will not add it to the watch list. Where am I? Yeah, exchanging solution. Exchanging solution. I'm not sure. Or let's see. If this was the level, I would have kept it in the watch list, or maybe it seems good because it had this huge spike. But again, after this huge spike, you see the decline. Again, it does not look promising. So you'll have to be very careful with this small cap stock, because all the pump and dump happens within this stock. So you'll have to be very careful when choosing a stock, and have to make sure that you have analyzed the volume. Now you see Zensor, it looks good. You see the grouping of volume here, it is amazing. Now I might keep it because this is clear stage 2, and then this is clear stage 4, and after stage 4 it is currently in stage 2, or if in long term it is currently in stage 3, because the upper level of this is like this. I would not call this stage 3 because again the movement was rapid within the stock. After stage 2 it has this decline, and then it went up sharply from this point in stage 2. So it is currently hovering around its the upper resistance level. So I'll keep it in the watch list just because of the volume looks good, and long term wise, from it has to break out of this key level at 550. 550 should be my the psychological number. I mean, if it breaks out with heavy volume, then I think it's a probable buy. Just because of its resistance level and the grouping of volume, I'll keep it in the watch list. E-Clerks, wow, it's an Indian IT consulting and outsourcing multinational company based in Mumbai and Pune. Okay. Let's see what it is doing right now. Cool. And it has this huge surge post-pandemic, and now it is in stage 3. It is in clear stage 3. Sure. I'm going to add this to the watch list because it is in stage 3. You see it's in clear. It is not going beyond this level, and it is not going over 1900. So if it breaks out of 200 with good volume such as these grouping, and the grouping of volume is peaking up. So I'll have to wait long term for this one, but I won't mind putting it in the watch list. No point adding, because it's doing something that I'm not able to understand what it is doing right now. Tech Mahindra, it's already in my watch list. One power already. I'm invested in this stock. This looks promising. Right? This was resistance, this was support, this is like a base, and this is the upper level. If it breaks out with significant volume such as this, then why not? But again, I don't want to invest in stocks which are like overvalued, like 5,000, or the ticker price is high enough for me to invest in this stock. So I'll just skip it. It's just, I mean, there's no point. And of course, these are stocks that can go up to like 10,000, 20,000. But I don't like to invest in stocks which are over 1,000 rupees or 2,000 rupees, something like that. So I'll skip it. because I'll find a lot of other stocks which are within the range. The ticker price is I'm comfortable in investing. Now this is a stocks that I would like to add, because you see this is in clear stage 1 base, right? It is in stage 1, and if it breaks out of this resistance level at 750, then why not? And it is pretty close to its upper level, and the volume, I mean, of course we will have to wait for the volume to break out with it, right? So I'll add this to my watch list. Emphasis. Again, 2,000 rupees. I won't mind. Oracle Financial Services Software. Oracle. I'll just search Oracle. Ah, 3,000. Mock Design and Tech. Wow. Never heard of this company. Wow, cool. I would like to add it to my watch list, but it is still in stage 4. It hasn't created the base yet. So I won't mind keeping it in the watch list, because again it's like an undervalued stock. So I'll have to wait for it to create its stage 1 base and then wait for its breakout. But it might take longer. I might not even, I'll remove it, because it hasn't created a stage 1 base yet. So it has to create the stage 1 base. You have to have stocks which are in stage 1. It has already created a stage 1, and it is sort of in nearing about breaking out of its stage 1 base with significant volume, and that's when those are the ideal stocks based on the criteria that I have set for myself using Weinstein stage analysis. So I think this video is getting longer, and there are a lot of other stocks. So let's explore the stocks on my next video. I'll pick it up from here on and share it on my next video. But I just wanted to share my approach, and I'm going to keep building this watch list. So I'll continue on this video to my next video, and share my approach on how many stocks I keep in a watch list. So within the metals sector, you see Tata Steel, SAIL, and National Aluminium is in my watch list, and I'm not investing because you see volume structure is not looking good. So I can talk about so many stocks and so many industries, and I love doing that. So I would request you to please subscribe to my channel. And I'll be motivated, and if I'm motivated, then I'll bring out more content, raw approach on how I look at stock markets, how I build my plan, and how I build my investment plan. So please subscribe, and I'll see you on my next video. Thank you.